The cryptocurrency market and Bitcoin have seen a steep sell-off moving into the weekly candle close, resulting in what would have been a bullish close turning to a bearish one. In today's video, we are discussing exactly what needs to happen for the buyers to step back in and push the price action upwards, and why the price could still see a further correction moving into FOMC. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. Bitcoin has seen an aggressive sell-off moving into the weekly candle close over the past 2 hours, dropping from over 104,000 to just around 102,000, resulting in not only a bearish weekly candle close, but of course, a breakdown of the short-term uptrend of the symmetrical triangle. In today's video, we are going to be discussing exactly what this means for the short-term and the macro, the potential for continuations lower, and exactly what needs to happen from an economic and price action perspective for Bitcoin to continue back toward the upside. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, join us in the VIP. You can find out more information about our VIP channel by clicking the pinned comment, click my name to contact me, or these two links to find our entire 50+ month trading track record, or a 10-minute video showing you inside the channel. You'll get access to two main groups, our VIP channel and our group chat with over 700 members. Check it out, join up, and we'll see you in there. Let's take a look at Bitcoin. So as we can see on the short term, we have now seen a breakdown of this symmetrical triangle formation. We'll be taking a deep look at this in just a moment. Of course, the major event for today was, of course, that weekly candle close, which closed around about 5 minutes ago at the time of filming, and unfortunately, we had not seen a break of that weekly range. If we delete everything on this chart except our weekly range, we have got our two red lines. This is going to be our weekly range high and our weekly range low. Essentially, for us to be high time frame bullish and expecting continuations, we need to close a weekly above this level. And if we are going to see high time frame corrections, we need to close a weekly below this level. Until then, we will likely continue to see this aggressive chop until after FOMC. As we have been saying this entire month, essentially, the market is in a situation of uncertainty as a consequence of the uncertainty pushed by the Federal Reserve during the December Federal Reserve press conference in regards to interest rates potentially moving to 2 cuts instead of 5 cuts. This uncertainty in the monetary policy metastasizes and develops into the price action, and we see sideways chop and consolidation develop. That is exactly what we are seeing. So until we get clarity surrounding the expectations for future interest rates and that uncertainty that has been developing clears up, it is unlikely we see these weekly directional moves, and it is more likely we just continue to chop. And that is what we've been saying all month. We have seen yet again just how, determined this market is to remain within this weekly range moving into FOMC. So taking a look at the short-term charts, guys, again, like we said, we have broken down from this symmetrical triangle. There is a potential this could be deviation, and we'll come back and discuss this in just a moment. But moving over to the market data, we can see 24-hour liquidations and volume have gone up a fair bit, with volume not really moving 132 billion, but liquidations up a massive 95%, with the majority of those long liquidations occurring just in the last hour. You can see 230 million of the 369 million of total liquidations occurring in 1 hour. with the total liquidations being majority on the long side, as the market did correct with 321 million long liquidations and 47 million short liquidations. Moving over to the DXY is still holding above its high time frame range. If you have been following the channel, you will know we said upon the breakout of the range high, we were looking for a target at this 110 level. We came up, we tapped 110, and we've rejected since. The DXY will remain bullish provided this range high is able to sustain, and this range high will sustain or break down depending on the narrative set in the upcoming Federal Reserve press conference. We have got our interest rates in 2 days and 18 hours. We'll come back and discuss this in just a moment again, but the overall premise is, if we see any sort of indication, whether it be from the actual decision to drop interest rates, it is more likely we do see a pause, keep that in mind, or during the Federal Reserve press conference after, any sort of indication that Jerome may give in regards to potential future interest rate reductions occurring more frequently or happening more than twice, we will likely see the DXY correct, and we'll see the markets rally as a consequence of perceived systematic risk decreasing. The market is future seeing, so it doesn't act on what is exactly occurring now. More so, it tries to act or front run what is likely to occur at a later date. And that is why we see the market moving in anticipation of news events, and these news events often end up being sold news events. So it is more likely we see an interest rate pause, but we are watching what he says during that meeting to get an understanding of what kind of narrative they are developing and where the market will likely move. Looking at the S&P 500, again, guys, we have closed above that weekly high. So we've got one of the two things we need now to be bullish on the S&P 500 and expect continuations. The second thing we need is going to be a RSI breakout. When we get the RSI breaking out and that price action clearing the weekly high, that is going to be confirmation that we will see continuations higher. Until then, we have seen a structural breakout, but this is indicating we do not have the strength to sustain, meaning this candle could actually turn into deviation and we could see a continuation back down, and that is going to be a possibility while that RSI remains under the trend line. As you know, we have been bullish on the S&P 500 the entire time. We have been bullish ever since we broke out over here. We've remained bullish the entire time. We exited and took profits at 6,100. We have been short-term bearish on the S&P 500 since. Now, for us to be bullish again, we need to see both that RSI break and that price action sustain. When we get two of those things occurring, we will then expect continuations, and again, determining, or should I say depending on what interest rates do, will have a massive consequence on what these charts end up doing. So before we get into the crux of the analysis, go ahead and sign up to BitGet, BitUnix, or BingX with the links down below. These are my exclusive exchange links. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll trade on the exchanges I personally use. You'll support yourself in your trading journey, and you'll support me making this content. Check it out, guys, and we'll see you back in just a moment. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's jump straight back into it, and I want to start on this weekly chart as we have just seen that weekly candle close. Now, it is important to identify, what does this recent weekly candle mean, and what is the weekly chart really doing here, and what are the key levels we should be paying attention to? So let's start with the first point. Was the weekly candle bullish or bearish? It was essentially a neutral candle, right? It was more to the bearish side if we look at that large wick toward the upside with some just massive sell-off. But in regards to our range, it is a neutral candle. The reason why we would call it more neutral is because we have sustained within the range high to that range low on the weekly. And while we remain within this sideways consolidation on the weekly chart, the potential for continuations up or down remain valid, and that is going to be massively influenced by what happens with the monetary policy, as monetary policy stipulates demand. So we are still watching the upcoming weekly candle now for a weekly directional break. If we are able to break through that range high in the weekly, taking a measured move analysis from the range high to the range low, applying that to the breakout point, you can see that gives us a breakout target of around 115,000, where if we were to see a breakout toward the downside, that would give us a measured move target of around 83,000. So we do know that a break up or a breakdown on this weekly chart will be a strong indicator of where the market is likely going to move to on the higher time frame. So watching very closely, but in terms of this current weekly candle, I wouldn't worry about it too much. Not really much has happened. It is closed within. We don't need to be applying too much significance to it. It is just another candle of consolidation and an indecision. So moving into the next week, we are watching closely for the weekly close. Again, like we mentioned already, the interest rates is going to play a massive role in determining whether or not we go up. Not particularly the interest rate decision, as we already know it is more likely we are going to see a pause, but the tone and narrative set by Jerome Powell. As I just mentioned, if he comes out and alludes to anything that could potentially suggest they're going to be more likely to reduce interest rates in a future period, we will see the markets rally. Whether that be a direct statement saying we are going to see more than 2 interest rate reductions, or an indirect statement saying inflation is moving towards our target faster or even on track as expected. And if we see anything like that, that may allude to an environment where we could see more than 2 interest rate reductions, the markets will rally in anticipation. And if we don't, the markets will correct. And the reason I say the markets will correct, because this entire period here is a representation of consolidation, uncertainty. And what is that really a representation of? It's a representation of people waiting. They're waiting to see what they do. We're waiting to see what that monetary policy is going to develop into for us to then be able to predict where that price action is going to go on a higher time frame. If we look at monetary policies such as interest rates, we have direct correlations from how interest rates behave to, again, inflation, the strength of the dollar, the risk asset market, but more importantly, it formulates the trajectory and basis of perceived systematic risk, which controls the risk in the markets, which determines people's prevalence to be investing or taking money out or whatever they want to do in the market, heavily correlated to that perceived systematic risk. So we're taking a very strong look at that. We're keeping very strong eyes on that, moving into that decision to get a good understanding of where we're likely to move to. Let's move over to the short-term charts. As we can see, we have got some good and some bad news here. The good news is that we are still sustaining above our major level of support at 100,000 and our major level of support at 102,000. As we can see, these are critical levels of support marked out by these horizontal levels, and while we sustain above these levels, it is likely we continue upwards. The bad news is, on the short term, we have seen a structural breakdown of our symmetrical triangle formation. This, of course, is going to be our downtrending diagonal resistance, our uptrending diagonal support. The angle of these trends are are actually very close to equal, making this a symmetrical triangle. A symmetrical triangle formation has about a 50% probability of a upward break and a downward break. Determining the continuation direction is based on the direction of which the trend breaks. In this instance, we have broken toward the downside, and therefore the probabilities are in favor of a downward continuation. Where would we expect the price to move to? We are watching two things. Number one, we are watching a measured move target as a maximal move, and number two, we are watching our key horizontal levels of support. For example, the the 200 EMA, sorry, the 200 EMA is sitting at 100,000, which has a level of confluence at that 99 to $100,000 support block. Okay, we are watching levels of 97,000, which is another level of major support, and then finally we're watching levels at 92,000. These are worst case scenarios. I do not think we're going to move all the way down over here. We'll move down there if we get bad news from interest rates or bad news from the Federal Reserve, but until then, the short-term direction, while we remain underneath this trend line, specifically, mainly really underneath this downtrend here, is going to now be towards that 200 moving average and towards those levels of support. For Bitcoin to turn bullish on the short term again, we are going to need to see this downtrending diagonal resistance break toward the upside. If we are able to break above this downtrending diagonal resistance, whether that be over here or whether we come down first and then break out, at the point at which that downtrend breaks, we will then enter an uptrend and then be expecting continuations back toward the upside. But again, for us to see these high time frame continuations, we need to see that weekly range break, and we need to see some bullish news from Jerome Powell during that meeting to really get a grasp of where that price action is going to go. If we zoom out a little bit more, we can see a whole bunch of support under us over here, and we are only really in danger for Bitcoin for higher time frame corrections if we start to drop below that $86,000 region. You can see that 200 moving average, that 200 EMA is starting to push back upwards, which will cross through this level of support in, I would say, the next 2 weeks. And if we do see a breakdown of 86,000, which is our lowest most period of support, not only will we lose a 200 EMA, but we'll be entering this low historical resistance range according to the VRPV, which again, if we break into from the top side down, we move into with a period of bearish momentum. And this is a period where we need less volume to move between the price action on the horizontal scale. So bearish volatility will increase and we will see aggressive sell-offs occur if the price action drops below this region, likely towards 72,000. Now, the macro consequences of that will be on the weekly chart, we will likely see a breakdown of the 62.09 on the RSI. Again, the 62.09 on the RSI historically has acted as a major point of resistance and support, but also it acts as a trigger point. Every time we have historically broken below or above these levels, we have seen strong macro continuations up or down for Bitcoin. We've seen 30-40% rallies. We've seen 50% corrections. Almost every single time we break up and below these trigger points, we see large reactions in the direction of which those levels broke on the macro scale, which lasts multiple weeks and easily above those double-digit percentages. So we are watching very closely. That 62.09 level will likely break if Bitcoin is unable to sustain above that $86,000 region. Now, as we've already mentioned, and I'll say it one more time in today's video, the determining factor that will really impact whether or not Bitcoin is going to sustain above those lows or break through its highs is going to be interest rates. I can't stress how important this is. It is a direct correlation to what the price action is doing since the period of the beginning of, or should I say middle of December. The middle of December, the FOMC meeting, we saw, what did we see? Well, we saw Jerome Powell saying we have seen 2 to 5 interest rate, 5 to 2 interest rate reductions. We've seen a decrease in the expected interest rate reductions. The market sold off. We saw a multi-week sell-off. What did we see? We saw Bitcoin dominance rally. Why did we see Bitcoin dominance rally? In any periods of uncertainty, the most speculative assets within the market sell off towards what is perceived to be the safer investment options. Money rotates from altcoins to Bitcoin. The entire cryptocurrency market cap sees a correction. What did we see on the 15th of January? We saw CPI data come out bullish. We saw it come out better than forecasted. What does that mean? Well, it doesn't just mean we're going to see a rally, which we did, but it means the potential that the Federal Reserve will shift back their narrative, which is we're going from 5 to 2 interest rates to 5 to 5, from 2 to 5 interest rates increases, and the market rallies in anticipation of what may be potentially bullish news. So you can see that during all of this, nothing's really changed except the short-term perception of what may occur at a future period surrounding the monetary policy. And that is all it takes for the market to move. As the market moves on what is perceived to be in a future period, not what is actually right now. So that is it, guys. We're going to keep a close and tight eye on it. I wouldn't be worrying too much, I guess, over the next few days, particularly moving into FOMC. The price action is going to be most likely quite sporadic. I think the best case scenario for Bitcoin is we see a short-term pullback moving into FOMC. The lower we go into it, the better of a chance we see some sort of bullish reaction. If we explode upwards into FOMC, that's just going to lead us open to massive long flushes. If we do see that, I would like to see the sideways consolidation continue, or some short-term pullbacks. And the best case scenario for FOMC is going to be some sort of indication, or some sort of subtle, or maybe not so subtle, alluding to the fact that interest rates may continue downwards at a more aggressive rate than anticipated, or that inflation is easing off better than what they were expecting, or at least on par with what they were expecting. We see any of those variations, the market will likely continue upwards. If we don't, the market will continue downward. Moving really quickly to altcoins, the altcoin market is, more or less in the same position here as Bitcoin. We had this symmetrical triangle formation, and we have now broken toward the downside. So again, watching for corrections to 1 trillion, watching for corrections to 980 billion over here on the altcoin market, which does mean altcoins do run the risk of corrections. Now, let's just go over the short term one more time for Bitcoin and discuss, the potential for deviation here. There is a potential we see deviation upon the breakdown of this low. We can already see, if we zoom into a really smaller time frame over here, we do have that momentum rising, the price action starting to go upwards. We have some bullish divergences and potential higher lows developing. We do have the potential to see this deviation, and we would want to be seeing at least the price action start to close these 5-minute candles above this uptrending resistance now of the price symmetrical triangle, and start to develop some strength within this pattern. If we do see that, there's a potential we move back up to this now, what we will call our sell side liquidity, which is our buy side liquidity, to around this $104,000 region. But the probabilities, guys, for that, while we do remain underneath this level, are not really too much in the favor of the buyers. Thanks for tuning in. Catch you guys in the next video. See you then.